Hello investors and welcome back to Just Randy Stocks. Let's talk about ARVL and whether or not this is a potential Proterra bust killer. With all of these relationships that they have, it looks like they've got a UPS contract for 10,000 with a follow-on 10,000 units available. They have a sizable backlog. They have a relationship to build cars for Hyundai using their technology. They also have this relationship with Uber. It looks like they might be building cars for them. They're going to be doing vans. They're going to be doing buses. It looks like they're going to start off with the buses. Wow, there is a lot happening with this play. So why has this share price been going down and why is it a buy now? In my opinion, we're going to take a look at that in this video, but how do you even find the value of a stock when they're not generating any revenue? We're going to talk about that. If you're new to the channel, feel free to subscribe and welcome. Be sure to hit that thumbs up button. It's my birthday today, so it'd be nice to get 100 likes. So on the community tab and in the Discord, I made sure to alert everyone about this to make sure you get it on your watch list, but now I want to say this is a buy, and I know it's been running from that $3 mark, and you can be careful when you enter this play. This was a SPAC. Typically, SPACs are at that $10 mark, but I believe it's been punished so bad that it's starting to come back violently, and I think that this is going to continue to get momentum as they get closer and closer to production. Now you can see number 2, ARVL on, if you filter this in FinViz by sector industry, I got this as the second highest runner. And volume-wise, it's also in the top 20 for volume trending. So the last thing that I wanted to take a look at with you, you can see it's number 6 as far as volume, 2.5 billion market cap right now. I want you to remember that number, and I want to take a look at ownership because inside ownership is a massive 69%. And you could filter by that to see how it compares also. But let's take a look. How do you value something and how do you know this is actually a low price? On the technical side, you want to see it gain support. And the last 2 days, it has been obviously, that this has reached a low in the $3 range. It sat there for a couple of days and it has gotten support. Now, before their latest funding round, ARVL was valued at $3.3 billion by investors website PitchBook. And this was done back, this is an article from 2020. So if we're sitting at 2.5 billion in this stock play, I would say that this is still low and I would expect continued support in this play. So it has had a 52-week volume of running between $3 and $29 or almost $30. So are we on the low side? Are we closer to 10 than we are? I would just say $10 is the marker that you want to set for the short term, because that is the SPAC price. And I would say, are we closer to 10 than we are 3? And, that's one way that you can look at it. Now, the volume has been increasing. You can see it's a trading volume of 5 million, and this is sitting at 16 million. Now, if we look at the historical trading volume, it has been well above that 5 million mark ever since this started dropping below $5. It started gaining support at $3. And then people have just been coming back into the trade. So as far as tip ranks is concerned, this has almost a 260% increase. Above 266. So it is fluctuating, but that is just a massive upside. Now, I would say be conservative with this and just look at the $10 mark. But if you have this at a $10 mark as the potential upside, that is good. Now, on the technical side, before we get into the details of this stock, because I just wanted you to see why this is a buy now. Typically, I don't say that on things that are running. But if you get a pullback here, I would say anything under $4 is something that I wouldn't hesitate with this play. I believe it's going to have a lot of upside. Now, let me give you a few highlights about the company. First off, why did it drop down to $3 in the first place? Underestimated its capital requirements. So anytime you come back to the market to raise capital, that's not a good sign. And growth trajectory, right? So when you pull back on your growth, this is a growth stock. Obviously, it's going to respond to bigger numbers, and that was also not a good sign. Now, that's already priced in my opinion. They also had unexpected costs that were related to the battery modules that they planned on building in-house. And the plans to assemble them, I believe that they had to bring together a cross-functional team, and the same thing that happened with Proterra when they initially tried to stand up their battery operations. they weren't able to bring everybody together because of Omicron, and there were unexpected costs, and they had to get creative because people were missing to be able to help them do that final assembly and planning. So they had to extend their time frame for cell line capacity. Now, operating expenses for raw material, they have a model that they put these material costs in, and it looks like they didn't plan for inflation and the fact that everyone's going to be pulling on these same materials at the same time, and initial factory needs. And just remember this one, because I want to talk a little bit about their factory needs in just a second. So their slowed plan rate of expansion and additional capital needs basically were the main reason for this stock price going down. So let's talk about what's causing the share price to go up and find support. Of course, I believe it went down so low, it's just getting technical support and people are buying in under $5. But also the electric bus entered a test stage last month, and it's ahead of its public road trials and certification. So any progress or news that comes up that you hear about that is definitely going to be a bullish signal for the share price. And they also unveiled the design for an electric car that it's building in concert with ride-hailing company Uber Technologies. 3 reasons to buy Arrival stock and 1 reason to avoid it. Cost-competitive manufacturing. Vehicle bodies are not going to be made of steel, which could be a benefit to overall manufacturing process that's going to avoid any stamping and welding that will have to occur. But they're using plastics, which I don't know how the market's going to perceive that. Maybe it's fine, maybe it's okay. And glass fiber. So this is to give the vehicle more durability so it doesn't have to get as many repairs. Production process is supposed to be streamlined, not using the big factory setups, 20 times less capital, 1/10 of traditional manufacturing capacity and expenditures, lower operating expenditures, and they're able to scale up capacity much quicker. Obviously, robotics, I believe, is the way of the future. Arrival expects to start commercial production of the buses in the second quarter of 2022. So this year, vans in the third quarter of 2022. So it looks like this is going to be the year of revenue generation. So it's not happening next year. It's happening now. They're going to ramp up, and you can see that. I believe it's going to start being reflected in the share price. Now, it also talks about their strategic partnerships. So say you think this is a speculative play and you don't like it because they haven't really produced anything yet, they still have this strategic partnership with Hyundai Motors. They have invested in the company 100 million euros, and Hyundai's not going to sit back just like these other existing manufacturers without doing things to fundamentally change towards EV. So Arrival is also partnered with logistics operator UPS. Arrival expects to generate a revenue of 14.1 billion with a gross profit of 3.8 billion in 2024. Now this has been delayed, right? So we said that there were some pullbacks on their forecast and everything, but sales of more than 1 billion in 2022. I meant, even if they pulled back from this, these are great numbers. So we'll have to see what they do. I believe that the pullbacks already happened. Of course, we'll have to see what those new projections are. Their earnings is coming up. You don't have to hold this play through earnings. I would say that this is something that you just add to your position if it does fluctuate and come down immediately following earnings and they don't like what they hear. As long as the fundamentals are in place, the financials don't look good, and obviously they have to prove this in the real world market, and that's the last thing that I'll leave you with. Obviously, I did not cover this, up to this date because they were just losing money. I mean, their cash flows are horrible. Their balance sheet doesn't have much money on it, so they had to come back to the market. I mean, they've got 380 million, and at the rate that they're burning right now, they really need to generate something to get revenue in, and that's why I've avoided this. But this is at a price that I think you should consider now. If you'd like to see another video on Arrival, be sure to subscribe to the channel and hit that like button, and I'll see you in the next video.